A wise man once said, the will to win, the desire to succeed,
What takes guts is to put yourself on the line.
the urge to reach your full potential.
A leader makes the way.
These are the keys that will unlock the door to personal excellence. Success Resources is the world's leading events promoter of business, personal development, and wealth creation programs. For over 30 years, we've helped over 10 million people across 30 countries unlock their full potential. From North America to Europe, to Africa, to Asia, to Oceania, we are the key to your personal success. We open the door to the world's best speakers, such as Anthony Robbins, Sir Richard Branson, Robert Kiyosaki, and T. Harv Eker, to name a few. Praised by Donald Trump for being the world's best, we have over 500 events a year and access to the greatest thinkers, achievers, and motivators of our time. We guide you to the success that lies in every one of us.
But you will not discover your greatness in your comfort zone.
You have to have confidence in yourself.
We have never really truly reached our destination. There's always another level to strive for. Your best is yet to come. Success Resources, your learning partners.
Hello, everybody. Welcome again. Welcome to Monday again. Well, Monday is a great day to set goals so that you can get to do your things that you want to do this whole week. So welcome once again, and welcome to Bitcoin journey to 100,000. And some of you may say, wow, Richard, that is quite a far distance away. Yes, you are right. As I prepare this stream, Bitcoin is at 26,000, dropped by I think 2,000-3,000 over the last 24-48 hours. Altcoin dropped even more. So the question is Bitcoin dead now? It is a bear market. Recession is around the corner, or some even say recession is happening right now. Is it time to wait and see, or is it time to get out of everything and hold cash only? Well, that might be a logical move for some of you, because stocks and S&P 500 dropped 20-30%, and many tech stocks have dropped 60-90%, from their high. So for those of us who are investing in crypto market, what do we do? So that is what we want to discuss today. My name is Richard Tan from Success Resources. We are the world leading education provider. Every week on Monday, like today, this is streamed live on Facebook and YouTube. We will be touching on the making videos, tracking the incredible journey of Bitcoin to 100,000. And if you are interested to learn and to follow us on this journey, make sure you subscribe to the channel, smash the thumbs up button, so that whenever we do any video, you are the first to know. So I'm very delighted to bring my friends, our teacher to many thousands of you out there, Dr. Clemen Chiang, to the program. He's authority in financial investing and a very well-known teacher and coach to many thousands and thousands of students all over the world in the art of wealth creation. Welcome, Dr. Clemen.
Wow, Richard. We are back on Monday, and today we got quite a number of important news going out in preparation for tomorrow's FOMC rate hike meeting by Fed Chair Jerome Powell. And over the weekend, it's kind of preparing the market for this big move tomorrow. And as what you shared just now, the Bitcoin has dropped very, very significantly. And what I will take away for today's program, this is going to be very, very critical. I think one of the most important Bitcoin to 100,000 YouTube series that we're going to ever do. Yes, we are ready, Richard.
Okay. So thank you, Dr. Clemen. As we are preparing this program right now, Bitcoin is trading at 25,000, a huge drop from 24 to 48 hours away. So is Bitcoin dead, right? Is Bitcoin dead? So what the question to you, Dr. Clemen, is what is the cause of this decline and sell-off?
Absolutely. Let's start off with this first important article. I think this captures the essence of what has happened over the weekend, leading all the way to today. Bitcoin ICE crashed below 25,000 as these three key factors weigh in. We're going to take a look at these three key factors, and we're going to learn so much just from today's session itself, all right? So number one big factor is none other than inflation. Now, inflation has hit an all-time 40 years historical high. I'm talking about really all-time 40 years historical high. And this is the part where I want to bring in the data from the official government website, Bureau of Labor Statistics. We were expecting a much more positive, lower inflation data on Friday, but unfortunately, it has shocked the market, completely shocked the market. And let's walk through this journey together, all right? So the first thing first is we need to capture the all-important 5% line. And the 5% line is shown right here on my dotted red line. And the last time when it broke above 5%, we can see that was in the year 2008. And then I begin to move my crosshair right over there and try to find out what was the highest ever. That was in July 2008 at only 5.6%. As we all recall, 2008 was the year of the great financial crisis, the mortgage crisis, the subprime crisis. That was the year the market came tumbling down and kind of do a reset in the market, all right? Highest rate, 5.6. Right now, I'm going to move my mouse to this period here, whereby for the first time it crossed 5% in May last year, 2021. So this is what I'm going to do. I'm going to select this place right here, boom. And kind of going to start from this May right over here and kind of highlight this period, all right? And then what we're going to do is going to trace this entire journey from 5%, boom, June 5.4, July 5.4, August 5.3, September 5.4. We will tease that 5% range for about 3 to 4 months with the assurance by the President of the United States of America, the Treasury Secretary Janet Yellen, and the Fed Chair Jerome Powell that all things are fine. In fact, he made a very, very big speech leading all the way to October 6.2%, November 6.8%, December 7%. In January, when it was at 7.5%, he told the world, Fed Chair Jerome Powell, that we are in a transitory inflation. All things under control. From January 7.5%, we kind of move out to February 7.9%, March 8.5%, and then April 8.3%. We thought that we have hit the peak of the March 8.5%. And holy moly, last Friday, when they released for the May, we are historical high 8.6%. This is the moment of truth. And one big question arises out of this entire journey. And the big question boils down on this very important word. Do we still trust the government for all the crap that they are telling us today? Where is that trust? And ordinary Americans already suffering. Walmart took a hit. Target took a hit because normal, ordinary Americans are not spending money on key essentials. I mean, we're talking about Walmart going there to buy your grocery, buying your normal things that you need. So for example, it could be as simple as the cleaning detergent to wash your floor, or as simple as your toothpaste. People are withholding their spending. The high prices are hitting ordinary men. So this is the first number one reason, as highlighted by this article, because of inflation. Now, because of inflation, that will bring us to a very important consequence that is going to be spelled out tomorrow, and that is the upcoming interest rate hikes. So I'm going to bring out to all of us to look at the historical interest rate hikes. So right over here, let me just zoom, make it bigger and everyone can really enjoy the data. This is coming from the Board of Governors of the Federal Reserve System. This year, since March 2020, interest rate was brought down to zero. As you can see right here, where it was literally called the free money era. And that was a brilliant move to kind of quickly restore confidence in the financial system, because the pandemic created so much fear, there was a meltdown. So in our lifetime, in our era, there were three major meltdowns. Number one, dot-com crash, 2000. Number two, financial market crash, 2008. Number three, the pandemic crash, the year 2020. And that's the reason why we are able to experience like zero interest, free money, right? So if we bring this context to currently today, the year 2022, March for the first time, interest rate went up to 0.25% from the 0%. May increased by another 0.5%, so we are hitting 0.75 cumulative total, all right, 0.75. So that's the number to remember. Now, if we were to go and further raise interest rates tomorrow, word on Wall Street is that it will kind of hit 1.5. That means you add a 0.75 to the current 0.75, you hit 1.5. So where exactly is this 1.5 we are talking about? Right up here. Here we go. I want to make sure everybody can see everything. Let me just zoom up a little bit more and it's good, all right? So that was in 2019, the pre-pandemic crash, interest rate was already at 1.5%. So there's a few numbers that we are predicting tonight. In fact, tonight I'm doing the trade through the night with all my coaching students, whereby we'll trade from 8:30 p.m. Singapore time to 4 a.m. in the morning. And all that we do is to make assessment of three potential numbers. Number one, interest rate will probably go to 1.5%. Back to the days of October 2019, pre-pandemic crash, interest rate was 1.5%. So tomorrow they have to raise 0.75 to hit up to 1.5%. Okay? Another number that everybody is thinking about is actually to increase by 1%. So if we increase by 1%, plus the current 0.75%, we'll hit 1.75%. That's the second number we're aiming at. And the third number, which I am aiming at, is actually 2.00%. If they want to be aggressive, let all hell break loose. One shot, let the market suffer a pain, increase by 1.25% plus 0.75%, we hit 2%. Be very, very determined to bring inflation down. And I'm looking at 2% because we really don't have much time to play with right now. With the midterm election on 8 November, we count by finger, July, August, September, October. We got 4 more months to the polling station. And then 8th of November, they'll announce the midterm results and people are suffering. So I'm on the extreme end of a total cumulative 2%. The conservative is looking at 1.5%. Somewhere in the middle will be 1.75%. And that will be the Armageddon for tomorrow. And this is still back on the first reason. With that, we come down to the second reason. The second reason is because right over here, we are already looking at DeFi losses are contagion. Right, so I think I skipped one of the reasons. Hang on a minute just to be sure. Yep, right over here. There is a big news about Celsius stopping withdrawals and giving a suspension on their platform. So who exactly is Celsius? We're going to take a look at this guy. And here we go. Celsius is exactly the trigger for the collapse of Bitcoin to 25,000 that we've seen today, all right? So it halts all withdrawals as it faces liquidity crisis, and then as a result, it tanks 45%. So what is this about? Means you're lending people money based on the coin that you receive, all right? So let me read out to you the first paragraph, and then we're going to dissect the consequence of this. Lending platform Celsius Network made a major announcement recently that it has paused all withdrawals on the platform, a move that it calls is in the interest of the community. Following the announcement, the Celsius coin is facing intense selling pressure, crashing 45%, dropping to 20 cents. And that is the reason why, right? So which other coins affected? Celsius has been previously rumored to sell staked Ethereum in major quantities to restore liquidity to its users' withdrawal. Just as the news poured in, Celsius has reportedly transferred wrapped Bitcoin, which we call it WBTC, and ETH in massive quantities to the FTX crypto exchange 3 hours ago. As of press time, Bitcoin and ETH are both trading 8% down. So if they are having a liquidity crisis and the sub-headline is calling major liquidations coming ahead, they are selling more and more assets to be its liquidity obligations, to meet its liquidity obligations. As a result, word on the street is we are going to witness more sell-off in the broader crypto space, all right? I think we are going to take a hit all the way to the floor of 20,000 on Bitcoin. So let's diagnose the second important point. Here we go. And I hope everyone's still breathing, still alive. All right. This is the moment of truth where, we are still only on the second reason. And thereafter, there's one more reason right up here. Here we go. All right. Inflation data, we talked about it already. Celsius, we talked about it. And right over here. All right. This is the one where the whole world is monitoring the 20,000 support price, the 20,000 critical price. This is the super important one, right? And of course, as a result of Celsius kind of collapsing, and then you have a depegging of the Lido stake Ethereum, which is also causing panic selling in Ethereum. So right now, we kind of covered the three key reasons. We dive into the pricing, all right? So this is Bitcoin on a one-day chart. And of course, right now, if I zoom out, kind of go like crazy, you can't see much. And then I'm going to switch the chart over to look at Bitcoin on Yahoo chart instead. Easier to read, all right? So what we're going to do is this. We're going to aim at 25,000 and draw a line horizontally across it. Zoom. Okay, so this is where we are. And we drop a vertical line down here. And we say that, hey, we are coming to the point in time where we are back to 1st of January 2021 pricing. How could this be? We have only progressed. We didn't backtrack in terms of the development of blockchain, in terms of the network effects, in terms of the entire ecosystem. Do you mean to say that this all-time high here and this all-time high here is a smoke screen? Because the first all-time high here was caused by Elon Musk, where Tesla bought $1.5 billion worth of Bitcoin. And the second all-time high here was caused by the approval of the Bitcoin futures ETF, BITO. And that gave us the legitimacy that we needed for the entire blockchain community, especially for Bitcoiners, right? Has this all gone to waste? That's my call to action to all of us today. Have we gone to waste everything that we built in 2021 itself, two major events. Convincing the #1 super entrepreneur of the world to buy $1.5 billion worth of Bitcoin, and then convincing the government of United States of America to approve a Bitcoin futures ETF. Have we gone down to waste? Because if we are looking at the start of January 2021 versus today, we are back to the same price. What has happened? All right. So I put forward this question for all of us to think through. This is Bitcoin. Now, quite some of you are also holding on to Ethereum. Maybe you needed Ethereum to do your transaction, pay for gas fees, or maybe you are kind of seduced by the idea from proof of work to proof of stake, that you own 32 Ethereum, you can be part of the proof of stake. Let's take a look at the price. Here we go. And we do the same treatment, all right? The number to aim at is 1250. Really nice round number. And then we kind of do this simple exercise, all right? Same thing. Step 1, draw a line. Boom. 1250. Step 2, drop the line. Boom. Same, January 2021. And then we mark out these two areas, all right? Mark out these two areas. We are right there right now. And again, there were two major peaks of Ethereum, right here and right here. Kind of follow the similar pattern of Bitcoin, right? Now, I was trading at $120 Ethereum price in December of 2018, at the worst time of the market. $120 per coin, okay? So today at 1,002 is like 10x of 120. But again, we put into correct perspective, all this development, have they gone to waste? If we're talking about 2021 whole year plus 2022, how much has evolved for Ethereum? Let me tell you. Number one, we've gone through the evolution of DeFi, decentralized finance, majority of which is built out of the Ethereum blockchain. And then, of course, Polygon came around, Binance Smart Chain came around. So they start to spin off other chains because Ethereum was so successful, the gas fees went skyrocket high. Number one. Number two, the whole evolution 2021 until today, we have a very successful NFT marketplace. Started off with OpenSea.io, right? And non-fungible tokens, kind of an art piece, became a bragging right. Everybody went for it. Most famous of them all is the Boring Ape. Has this all gone to waste as well? Again, that's the question we need to think through so that I can bring everybody back to planet Earth. And the planet Earth goes this way. Before I go any further, I want to make sure everybody of you are mentally sound to handle the truth. If you are mentally sound, can you just post on the Zoom chat or YouTube chat or the Facebook chat? Just say, I'm fine. All right. And I give you 10 seconds to tell everybody that you are fine.
Hey, I'm looking for a couch to crash on. Until night, shouldn't be the night I go home with anyone.
Okay, thank you for assuring me that you are fine. Then we can handle the truth. And Richard, sorry, this your first question took me a long time and I'm still not done yet. Okay, so once everybody say you're fine, then we can really go and understand the truth, the ground truth, all right? So here we go. What is the ground truth? Which is super, super important and will give everyone the right context to understand this unique phenomena that we are going through, all right? I'm going to do something that's kind of shock everybody and give everyone the right context to understand what exactly are you going through today. Here we go. This chart that I'm showing you represents the US market. And I'm talking about the market as really the entire market, whether you're talking about commodities, stocks, options, trading, everything is like the US economy itself. This is the de facto chart that we look at, the Dow Jones Index, all right? And look at the bottom. I mean, the bottom, we started from 1992 all the way to 2022. We got really a rich history, all right? That's like 30 years history of data, proven to be resilient over time. Now, there are 3 time frames within this large chart itself, and I'm going to mark out for everybody, all right? The first time frame is right here whenever there is kind of a growth spurt, this period here, all right? This is time frame number 1. And then we enter through a time frame number 2, where the market kind of a move on the sideways. Time frame number 2, around here, okay? And then we enter into time frame number 3, kind of right over here. Boom, 45 degrees, okay? So you all have to look at this presentation in this manner first, right? Then to finally arrive at a conclusion whether it makes sense for you or not, right? So first thing first, we're going to attack in my era. I'm not too sure you're born in which era. I started investing in year 2000. And on the first year I invested, that was the dot-com crash. Here we go. Let's go through the dot-com crash right now. All right. And this is the dot-com crash. How do we measure it? Right at the peak on first week of January 2020, the year 2000 itself. And then you draw a horizontal line. All right. And after you draw the horizontal line, what you discover is this. The first 10 years, it took the market 10 years to achieve what we call a break even. So just imagine you entered on the first week of January 2000, year 2000, and the next thing, the market crash. It took about 10 years to recover everything that you put in. So that the idea is that you got caught right here, the market went down and tried to drag, go up, and then it collapsed again. But finally, it really departed from this high of your entry only from the 10th year onwards. All right. So 2000 dot-com crash took us 10 years to break even. So everybody, please remember that. All right. 10 years, huh? And you must remember year 2000, what kind of world we are in. We don't even have a bloody website. Because 2000, that was the first launch of the World Wide Web. Most companies don't even have a web presence, don't even have a domain name. All right? That's how it was back then. Very, very early stage. All right? So dot-com crash took us 10 years. Now I fast forward and we identify the second great crash. And that's none other than the 2008 financial crisis crash, right? Again, I just like to round up to the 1st of January 2008, and then I draw a horizontal line across, and then I drop down again, all right? So how long it took us to recover? So that 1, 2, 3, 4, 5. From 10 years, we reduced to 5 years to hit break even. Again, we write it down right here. Break even, 5 years, okay? So what can we learn from this? Looks like the market has grown smarter, know how to avert the crisis, reduce and time squeeze the crisis from 10 years break even to 5 years break even. And thereafter, the market start to fly again. Boom, all right? So you've gone through 2 crises with me. I mean, that's my personal journey, all right? Dot-com crash, 2008 crash. Then let me show you the third crash. Dun, 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 dun. The third crash became even more interesting because by the time we hit to the third crash, this is what we have gone through. again, join with me. We can kind of round up the numbers again. I just put it like, let me just stretch a little bit, and then it's very, very clear to everyone. Put it like exactly right here. Let's say middle of February, the year 2020, pandemic crashed. All right. And then you stretch out, boom. All right. All the way to the middle of November. Middle of Feb, middle of November, 11 minus 2 is 9. I will just round up to 10 months, give it the benefit of doubt, all right? 10 months. So we type out again, break even from .com 10 years to subprime crisis 5 years. Right now, we have arrived at 10 months. You've gone through 3 crises with your teacher today. And my question to all of us is, the current inflation crisis, how long it'll take us to hit break even? All right? So I'm going to show you what's the chart today. And then we're going to kind of tackle this question together. I mean, it's a really, really good question to tackle together. It's a healthy exercise. All right. So here we go. And it's a beautiful, nice number. Nice round number. 1st of January 2022, we hit an all-time high. And we say, hey, teacher, let's draw a horizontal line across. And I'm not too sure how far the horizontal will be drawn across. Let's say I draw it to 1 year to 2023. And then we begin to imagine. Imagine, the price drop down. Maybe tomorrow we'll have an all-time interest rate hike to total 2%. I'm asking for 2%. You want the pain? Give us all the pain, one shot. Don't torture us, all right? One shot, give the market the pain. And once the market realizes the Fed is serious to adjust this high inflation problem, perhaps it will go back up here. What is the break even? Maybe 1 year, maybe 2 years, maybe 3 years. Nobody knows. The whole crux of the matter depends on the decision tomorrow. What would be the interest rate hike? I'm asking for total 2%, which means to increase by 1.25% to hit 2%, give the market a complete shock. Since everybody already talk about recession, since everybody already assume we are in recession, since everybody stopped spending in the midst of recession, give it to us, man, and let us take the pain. And if that's true, I believe the US economy will have the resilience to bring it back to the break-even position. All right? So I'm going to zoom out. That's quite a lot of things for you guys to digest. And of course, in this opportunity, where should we be looking at? What should we be trading? Do we bite the bullet? Do we sell at a loss? All these are very, very interesting questions. But most importantly, I want to encourage all our viewers to really hang on in there, not with your peer group. This is the time you got to hang on in there with those with the largest amount of money. I call them the insiders. I call them the whales. These guys will be the one taking the lead. Case in point, Warren Buffett, in the past 2 years, has never invested more than $1 billion per quarter. In this year, first time, he invested 40 billion, 40 times. A change of his behavior. And what are the positions he entered into? This is exactly what we are studying. This is exactly what we are trading. And I think I shared enough. Back to you, Richard.
Dr. Clemen. Dr. Clemen, for this enlightenment of the situation right now. Okay, Dr. Clemen, not everybody is feeling depressed. Yeah. There's a billionaire, Stanley Druckenmiller. He's a billionaire. Stanley Druckenmiller says that he would rather invest in Bitcoin in recession. Well, he's a billionaire, so we all respect him, right? I mean, with the kind of mentality, etc. So my question here is just, Dr. Clemen, who is this billionaire, Stanley Druckenmiller, and do you share his same opinion and why?
Yes, absolutely great question, Richard. And you know, he's not only the billionaire on Wall Street to stand by this position, all right, where Paul Tudor Jones, where Michael Saylor, we have Elon Musk as well, including Jack Dorsey, including Katie Woods, including Mr. Wonderful. I mean, right now, we really have a whole list of people compared to the year before the third halving event. That's May 2020. I want to encourage all of you to go and trace back in history. Go and find, are there any billionaires, anyone from Wall Street before May 2020 who openly, publicly declare their love for Bitcoin? I give you the answer right now. Zero. Kono. Egg. All right. Totally zero. Because I was trading on 12th of May 2020 on the same day that Paul Tudor Jones was buying Bitcoin. He was the first Wall Street billionaire to openly declare his pledge of love to Bitcoin. And from that day onwards, then and only then, Bill Miller, Stanley Druckenmiller, Michael Saylor, Elon Musk, Jack Dorsey, one by one then step into the foray. That is the era of 2020. I belong to that generation where we started trading before Wall Street. So, what is the position right now for those of us who hold on to Bitcoin? I'm holding Bitcoin. I'm not sure about the rest of you. Our position is this. If you look at Bitcoin on a candle basis, what do I mean by on a candle basis? So if I look at a 15-minute candle, this is what you see. Wow, very depressing, right? Wow, a slippery slope down to hell. All right? And if you look at it on a 1 hour basis, not that good as well, because it's also a slippery road down. If you change it to 1 day basis, also not that good, 48,000 down. But the moment I switch it out to this view that I've been teaching you, and we ask ourselves the pertinent question, starting from 1st January 2021 until today, has the market or the instrument or the ecosystem evolved for the better? Yes, it has done so much more compared to the first 12 years. 2021 alone has achieved much more than the previous 12 years. That's how much has been done. Regulatory bodies are interested in it. They are putting together, and just very recently they announced that Bitcoin and cryptocurrency will be under the domain of the CFTC, Commodities Futures Trading Commission. And they just passed a bipartisan bill from both sides of the camp, Democrats and Republicans agreeing on cryptocurrency. Can you believe that? They are like, fighting each other all the time. This is a bipartisan bill. First time both sides willing to agree. How much further have we evolved? A lot. And most importantly, we managed to nail down the back actors of the market. This is the moment in time back actors will be exposed. And one of the best examples to kind of drill down the point is this guy called Do Kwon from Terra Dollar. And as it is, right now the fact starts to unravel. He has moved out $3 billion. $3 billion into his own controlled wallets without anyone knowing. One by one, the whisperer come out, blow the whistle on him. One by one, the employees start to unveil what's happening behind the scenes. It was designed as a fraudulent product from day one. Where do we stand? Bitcoin is the only decentralized product on planet Earth that no one can manipulate. That's our stand. Bitcoin is the only product in the world that's a fixed supply of 21 million coins. Fixed supply with a growing demand, price over time eventually will have to go up. And Bitcoin today is 100% legitimate. What else do you want? when the government has approved Bitcoin futures ETF, and there's one more Bitcoin spot ETF up for approval. We've gone so far away, and we get rid of all the back actors. The market is going through a period of consolidation, and that's the reason why those who really clarified their thinking say, yeah, this is no different from chasing the fiscal goal. This is the digital gold 2.0, and it's in a much more beautiful format than the gold chain I'm wearing. That is everything I shared, what the traditional, the Wall Street, the whales, the billionaires, that we truly believe in the future of Bitcoin. Back to you, Richard.
Thank you, Dr. Clemen. So, Dr. Clemen, now you have been in the market since the year 2000. So today is 2022. You have been around for 22 years, yeah, in the market. And of course, such a long time, you must have seen the market go up and down. And can you share with us your journey through this up and down till today, and your advice so that we can learn?
Yes, absolutely, Richard. And you know, my sharing is going to be kind of deja vu to what Michael Saylor himself has shared as well. In one of his recent YouTube sharing, he proclaimed that how many of us got the opportunity to take part in the IPO of the great companies. What are the great companies? From Microsoft to Apple to Facebook to Amazon to Google. I bought Google shares on day one of the IPO at $100 per share. But how many of us look back and really slap ourselves tight on the ass and say, how the heck we sold off the shares? We could have hold it until today, which is giving us a much, much greater return. I was trading day one of Facebook IPO. I hold out until we hit 100% profit, I get out because mentally cannot handle the pressure anymore. Right? And how many times we didn't hold out long enough? This is exactly what Michael Saylor said. And when he said that, I said, wow, deja vu. It's exactly what I've gone through since 2000 until today. So many crises. And sometimes the word is we chicken out. We chicken out, we crack under pressure. And if you look back, what is the takeaway from those moments of times we chicken out? Let me tell you 3 key takeaways so that all of you viewers who are watching don't repeat the mistakes that Michael Saylor and myself made. Number 1, when we sell at a loss, and you look back at today's pricing versus back then when you sell at a loss, confirm you could have made so much more profit. So selling at a loss is not an option. I'm sharing with you right now, it's not an option. And I'm going to put forward to you the thesis why it's not an option. Point number 1, how many of you today bought a house and you live in this house because you wanted your family, your loved ones, your children to grow up in the same house? And I can tell you, whenever you bought a house, you never pay with cash. You borrow from the bank, yes? So over the last 22 years, you mean to say you have not gone through any financial crisis? Whether it's a job crisis, business crisis, don't even talk about the market going down first. How about your personal crisis, emergencies, death of a loved one went into illness? Do you sell away your house? No, you just faithfully pay the bloody bank loan. You just service your bank mortgage loan. You don't sell away your house, right? So why are you thinking about that for these investments that you made? Simply because there's volatility in the marketplace today. So that's the first takeaway. Number 2, all that we do, in fact, I shared this very, very important point in the recent Great Reset that Success Resources just put up the event over the weekend. We share about baby boomers made their money, the first batch of millionaires from the stock market. Gen X people like me made our money in the options trading market. And the millennials made their money, the first batch of millionaires I'm talking about, in cryptocurrency. So every generation will have an instrument of wealth that will create the first generation of millionaires in that particular generation. Boomers stock market, Gen X options market, and then millennials cryptos market. What we should really be thinking about to set our sights even further is to ask our children generation. They belong to the Gen Z. We call them the Zoomer generation because they grew up learning via Zoom in classrooms because of the lockdown. And the instruments is around already. We have not identified it yet. But suddenly, when my children start to hit the age of 25 years old to 30 years old, that instrument will fly to the sky, will suddenly, boom, out of nowhere, shoot to the moon. We need to identify the instrument earlier than the rest. And the only reason, or perhaps the only impetus that we can find the instrument of wealth is that we stay invested in the market today, every day, until that day. The moment you get distracted, you do something else, sorry, even if the instrument appears in front of you, you got distracted. I got distracted. I should have bloody bought Bitcoin when it was trading at $1 in 2009. I was distracted because I don't understand the concept of wealth trilogy back then. I was focused on my stocks, focused on my options. I was not open to the idea of a new instrument of wealth that will create a new generation of millionaires. I missed Bitcoin at $1. So do you want to miss the next instrument of wealth that will create the next generation of millionaires? I don't think you want to miss. You got to stay invested in the market. So third point right here, and that is this. Many of you are struggling. You say, I want to sell. I want to just sell and kind of go to whatever loss position I have. And it's a practical question. I just have to ask you this. Do you really need that money so urgently? What do you need it for? Because other than investing, you have some kind of activities going on. You're working for a company, you're running a business. Why do you need the money so urgently? I can tell you there's only one reason when you sell at a loss: to handle your fear of the market. It's a psychological game. And Warren Buffett said it best. You must be extremely greedy when the market is extremely fearful. And you must be extremely fearful when the market is extremely greedy. Warren Buffett shown his greediness this year, Q1. $40 billion went into the market as compared to his last 24 months, maximum $1 billion. He has increased 40 times of his bets this year, Q1 2022. So what's your take? So that's the three key takeaways, and I hope all of you will benefit from it. Yes, Richard.
Thank you, Dr. Clemen. So, Dr. Clemen, we have come to the end of the program, and can you give us the conclusion? Okay, so do we sell everything and hope for the best, or listen to what you have shared with us, hand on? So can you give us that conclusion in 2 or 3 lines?
2 or 3 lines is, unless you're in a state of emergency today, you need the money so urgently that without this money, you cannot do a blood transfusion, you cannot do a heart transplant, or whatever. It must be really extreme. Because my assessment is all of you don't need this emergency money today. You want to sell simply because you're fearful of the market. I want to encourage you to look at the market in a longer time horizon. I've proven to you the US market from 10 years, squeeze it to 5 years, squeeze it to 10 months. That's how resilient and brilliant it is. They somehow know how to get back to break-even position. That's my belief in the US market. And my belief in the crypto market, likewise, is the same. The moment we release the time frame to a longer horizon, then you can breathe much better. And again, do you seriously urgently need this money today? If not, hang on for the ride and stay in the market so that you can be wise to spot the next instrument of wealth that will create the new generation of millionaires.
Thank you, Dr. Clemen Chiang. Thank you so much. Thank you, everybody. We do our best to research facts and data from the market and present to you with the facts and data you can make informed decision for your financial future. We remain bullish even at 25,000 on Bitcoin. Secret to success: wake up early, work hard, and own Bitcoin. Thank you very much, and wish every one of you a wonderful week ahead. Thank you so much.
He who plants trees loves others beside himself.
We believe that a small group of committed citizens
can change the world. Indeed, it's the only thing that ever has.
Regardless of background, everyone can have the same opportunities in education.
We believe that together, everyone achieves more.
We believe that real leaders don't create followers, they create more leaders.
We believe that we can learn from our competitors.
We believe that women work harder, do better, and are more committed.
We believe Earth is where we all meet,
where we all have a mutual interest. It is the one thing all of us share.
We believe that trees and forests are the lungs of our land,
purifying the air and giving fresh strength to all people.
We believe that happiness is the key to success. If you love what you're doing, you're already successful.
We believe that Earth is a wonderful place and worth fighting for.
We have a duty to protect it.
We believe in doing what is right, not what is easy.
We believe in anything that is worth doing, we do it with passion and excellence.
Yeah!
We believe that when the market is tough, we can be tougher.
We believe the best product should win, not the best sales pitch.
We believe the best time to plant a tree was 20 years ago.
The second best time is now.
We believe that winners are winners because they don't quit.
We believe in making decisions and owning our results.
We believe in innovation to continually provide value to all around us.
We believe that if dreaming is free, then we should dream big.
We believe that if we have knowledge, it's our duty to pass it down.
We believe that learning never ends, and once you stop learning,
you start dying.
We believe that someone sitting in the shade today
because someone planted a tree long time ago.
We believe that one person
or one great idea can change the world.
That's why we believe in helping you grow and succeed.
And with your help, we can change lives.